Good evening, everyone.
Evening.
Hopefully, Wayne allowed me to unmute myself. How lucky I am. Welcome, welcome. Thank you for joining us tonight. I'm so happy to see everyone here. We have a pretty good turnout, and it looks like a lot of people interested in fix and flips. This is what we're going to talk about tonight. I will give you a little introduction about myself. My name is Steve. I'm the founder of Finngo Bookkeeping and Tax, and we're looking to provide a modern solution to your bookkeeping needs, specifically tailored to real estate investors. I'm an investor myself. I have firsthand experience, all the troubles that you're going through. I understand the numbers that you care about, and I know the services that you're looking for. For today's webinar, we will focus on bookkeeping and specifically bookkeeping for fix and flips, particularly if you own them in your personal name. But don't fret, if your situation is a little different, I will explain to you how you can get in touch and how we can find something a little more customized to your needs. My goal would be to highlight what does a REI-focused bookkeeper bring to the table. And it usually goes beyond just saving money. Saving money is a big approach, but there is also secondary benefits such as staying compliant, having peace of mind, and avoiding the tax man, which is a big deal. I think you all know this guy. We have Wayne Hillier joining us from REI Masters. I'm so happy that he's part of this and co-hosting with me tonight. So I will let him introduce himself a little further.
Thank you. Thank you. And glad to see everybody here. I can't see you on this screen because I got it all set up a certain way, but I'm looking over here and I see everybody here. I see some cameras on, like 1, 2. Everybody else is just listening. That's cool. That's all right. Well, I'm glad to see you guys here regardless. Happy to be here co-hosting this with Steve. As you guys know, this is something, if you guys follow me, this is something I'm very passionate about, especially this year. It's kind of my mission for this year. I like to, normally every year I like 2 or 3 little projects for myself. And the big project for this year is really normalizing and changing the industry standard around bookkeeping and taxes. I feel like this is just one of those areas that has been completely ignored and neglected. And let's just be honest, for the most part, the big reason is because I think that everybody's just a little cheap. Let's just be honest. Everybody's a little cheap. They're all trying to figure out ways to cut corners to save money because guess what? Interest rates went up in 2022. I know it sucked and it's been going up ever since. Now they're starting to come down, but that, let's not be like, oh, once interest rates come down and my expenses come down, then I'll be able to afford bookkeeping again. No, like we have to make sure that we budget it in and we have to make sure that we're running our numbers and stress testing our deals to make sure that they work even when interest rates go up or even when rents go down. We got to make sure that we're not cutting corners in our business, especially the person who's in charge of your money. You know what I mean? Just think about all the money that you're leaving on the table or the money maybe that you're missing out on because you think that you're saving a few bucks every month. So I'll give you a personal example of, I guess maybe just for those of you guys who don't know me, my name is Wayne Hillier. I am the founder of Real Estate Investing Masters. Is a community and coaching program, as well as I am the host of one of Canada's top real estate investing podcasts, the Real Estate Investing Morning Show. I've been a real estate investor for almost 15 years, lots of experience in all different strategies of real estate investing. And I'm very passionate about helping other real estate investors reach their goals and their dreams, whatever your dreams may be. As you can tell, I don't take myself too seriously. I think that the journey should be fun as well. I think the journey should be great and it should be enjoyable and it shouldn't be super stressful. But when it comes to the numbers, I'm super dead serious. You're going to see like a super serious face for the rest of this webinar. I'm like dead serious about the numbers. I'll tell you a little personal story about why I think this is so incredibly important. And that is that me personally, I didn't always have my poop in a group. Let's put it that way. I was very laser focused on just rapid growth for a very long time. And I tended to ignore a lot of things that were less important in my eyes. And one of those things was systems and bookkeeping. And like many of you, you're just like, I just got to focus on finding the money and the deals right now. I don't have time to put all these other things in place. It's better to get started than to be perfect. I believe in that. I do truly believe in that. I'm quoting the great Barry Maguire there. I truly do believe in that. However, what ends up happening is you keep saying that over and over and over again. You just keep growing and growing and growing. And then you reach a certain point where it's like, okay, well, now I need to set these systems up because I'm completely overwhelmed and it's hindering my growth and my progress. However, I'm so deep in it, it's impossible for me to fix this. So when Gabby and I were doing fix and flips, and we did a lot in 2022 when the market was like really hot for fix and flips, so we're doing tons. And I swear, we were so incredibly disorganized and running around with our like chickens with our heads cut off. And this isn't the first time this has happened. This has happened many times before where we've done other fix and flips where it's like we get to the end of the project and it's like there's receipts everywhere. I got receipts on my desk. I got receipts on Gabby's desk. I got receipts in my personal vehicle. I've got receipts in my work vehicle. Back to when I still had a job, I had receipts in glove compartments and under what's the one right underneath you? Is that the armrest department? Anyways, we had envelopes, we had emails. You know what I mean? Just receipts everywhere. And it was so disorganized. And what would end up happening is that at the end of every job, it would be like, oh crap, we got to get all this stuff together. And then if we didn't have any partners on it, we would just like, whatever, we'll just deal with it at tax season. And then come tax season, and it's an absolute freaking nightmare. And, you know, it was almost like routine where like Gabby would come to me and she'd be like, okay, I've gone through everything. Here's the 30 transactions. I don't know what these transactions are for. I need you to find them. And she'd be like, you know, we've got this one's for $30.15. What was it for? And we don't know because all of our, you know, our flips were under our personal name, right? So I don't know if that was a coffee receipt or it was Home Depot for, you know, a rental property, or it was a receipt for our fix and flip. And so, you know, in order to figure out what it was, I would have to go, I would search through my text messages, like that dollar amount, or we'd search through our emails, that specific dollar amount, trying to figure it out. And it was just absolute madness and completely disorganized. And I remember specifically, I mean, this might not seem like much to you guys, but for me, it was like a huge pivotal turning point for me. I remember there was, we were all done. We finished it. We figured out our numbers and everything else. And we're like, okay, we're profitable. It's good fix and flip. But like months later, I found like a $500 receipt. It was approximately 500 bucks. And I couldn't, for the life of me, remember what it was for. If you've ever looked at Home Depot or Rona receipts, they're not very descriptive. It'll be like 1/4 inch B3T SAGE. And you're like, what the heck is that for? And it's impossible to figure out what it was for. And I got this $500 receipt, and I don't know if it's for, you know, a fix and flip or not. But anyways, we find out later on that it was indeed for the fix and flip, and we had missed it. I guess it just fell in one of my pockets. I figured I'd get rid of it, or I'd take care of it later. And that $500 receipt doesn't seem like very much, but when you're going to learn today, and maybe you've learned this before in the past, or you already know this, a $500 receipt on a fix and flip is worth $200, because that $500 deduction that you're going to deduct from your personal income taxes, if you're in a 40% tax bracket, that's worth $200 in a refund, like being refunded to you. So the fact that I lost that $500 receipt, I'm like, I literally lost a $200 bill. That's the way that I looked at it. I'm like, this is a $200 bill. How many more of these receipts are lying around that I forgot about, that are sitting in, you know, a shoebox, or in maybe they went in the garbage by accident? How much money am I leaving out here because I don't have a good organized system? And, you know, for the flips that I was doing around that time, we're talking about relatively small profit margins, like $15,000, $20,000. That's a pretty significant amount, right? And maybe you lost money on a fix and flip. That $200 receipt, you know, maybe that $500 receipt, which is $200, could be significant to you, right? For some people, it's like, whatever, no big deal. It's not, but like for others, this is a make or break. And the light bulb went on for me, and I said, you know, we got to get our stuff. We got to get our poop in a group. Let's put it that way. No cursing today. This is a professional webinar. So I I mentioned earlier that in most cases where we were using our own funds, not that big of a deal, we'll deal with it later type thing. But when you're working with a joint venture partner, completely different story, because when you finally finish the renovation, you get it on the market, you got your listing pictures, it's live, you're getting your offers coming in, you're negotiating on that property, or sorry, with the buyer. By the time that's done, they do their home inspection, they remove conditions, and possession date's coming. You better have everything ready to go, because your joint venture partner made an investment into this property and they probably want their money back right away. And if you weren't keeping track of all the receipts and everything else, and as well, you don't really understand how the statement of adjustment works, which I'm sure maybe Steve can shine a light on that a little bit more later. At the end of the transaction, when the lawyer sends you your statement of adjustments, there's a bunch of different adjustments. It's really super confusing. I'll be honest with you, I don't even understand it. Most people don't actually know how much they profited on a fix and flip. And I've seen so many people make this mistake, ourselves included, not understanding how it all works and how much money we actually profited. And when you've got a joint venture partner who's waiting for their money back, and check is cut, statement adjustments is handed out, they're kind of sort of wanting the money and a statement, your full financial statement, within a couple days, right? I'm sure they can understand, we may need a couple days to process and everything else, but they want it that week. They want their money back. They want to reallocate it into new investments. If you don't got your stuff organized, and if that's too much pressure for you, you're very, very, very likely in a rushed situation like that to make a mistake. And if you make a mistake and you don't figure out what the actual profit is, if you're short or maybe you're over and you're using that number to determine how much is being sent back to them and how much of their profits is there, you could make a mistake. And I've seen some people make a costly mistake, whereas they didn't have their numbers right and they gave their partner too much money. Now you're in a position where you got to call your partner back and be like, oh yeah, sorry, I made a mistake. I didn't mean to give you that much money. And they're like, wait a second, you're pulling the money back, right? You can understand how this can be a huge issue. Now, maybe their partners, your partner's good and they're okay and they're understanding. But some partners might be like, you clearly don't have your systems in place. Like you're not running a very professional business here. And that might not look good on you. And they might not want to do more deals with you in the future. So it could affect your reputation. So lots to cover today. I just wanted to share that with you to kind of give you a better understanding of why it's so important to make sure you got an experienced investor-focused professional handling your bookkeeping for your fix and flips. Because there's just, let's be honest, we're not bookkeepers and we're not accountants. We're investors. We are the CEO of our business. We understand good deals and how to raise money. Okay, that's all we're required to do. But our other responsibility is making sure that we surround ourselves with the professionals who understand all of the other items. We are the CEO of our business. Imagine you're the CEO and you've got head of each department. You need someone handling the finances. You're not expected to understand it, nor should you. So Steve's going to cover that today. Got to talk about why it's incredibly important. Going to go through some case studies as well, which I'm really looking forward to seeing. And also you're going to get into the CRA and tax laws and all that other stuff too, which is for all you tax nerds, this should be a hoot. But I'm going to pass it back off to you now. Okay.
Thank you, Wayne. That was a great introduction. I really like to hear personal stories. They really help explain the reality of the situation, because it is one thing to look at it on paper, and it's a very different thing to actually live through it. And like you said earlier, outside of chasing deadlines with the government, then you also have to chase deadlines with your joint venture partners. And it's really important to kind of look professional. Yeah. So as we're going to move along, I want to share a couple of upcoming events that we have. Last month, we had a rentals bookkeeping webinar, and that one was really popular. We actually ended up having a lot of people onboarded on that. And it was that popular that I think that we might need to do a second one, just to give the opportunity for people to ask more questions and to kind of understand it a little bit more. Today, we will have the fix and flip bookkeeping webinar. So we're going to discuss what is it that you really need to have at the end of your flips, and how can we help you to do that. On July 31st, which is on this Wednesday, I will be at Mogul Realty's Mastermind. That is an in-person event. And I should say I am not affiliated with Mogul at all. I just like to attend the events because they're one of the very few in-person events in town. I will be available for networking pretty much until 10 p.m. when they kick us out the room. We're even contemplating to I'm thinking to start our own like deal analysis kind of in-person event, because there is a real need out there. And masterminds with Mogul are great, but they're very presentation driven and don't involve the audience as much. So now I would like to get more input from people. On September 9th, we will be hosting our next webinar, and that would be on the Smith Maneuver. And the Smith Maneuver is essentially a strategy where you could set up your principal resident mortgage interest to become tax deductible. Because when it's normally set up, it is not tax deductible, but there is a way where you can organize it, and it will essentially give you a lot of refunds on your tax return, takes those refunds, pay down your mortgage and create more room into it, pay it off faster. There's a lot of different things in that. So I would highly recommend this, because a lot of people have a principal residence and they're leaving money on the table just because they don't have it structured correctly. Many of you have heard about Recon. That is September 21st and 22nd, and Finngo will have a booth there. So if anybody is in town, you could meet me there in person. And I would also be hosting a breakout session with one and only Mr. Kirkwood. We will be talking about the Smith Maneuver in person and live. So if you are interested to learn about more and perhaps just see how the numbers work in detail, that would be a really good event to attend. And lastly, in October, we don't have a date yet. We're looking for that. We will be hosting a bookkeeping workshop or webinar about real estate agents bookkeeping and how that is a little bit different and how they would benefit from the services that we have to offer. So those are our upcoming events. You can take a screenshot. In the end, we are going to also have my direct contact information in case you would like to find out more information. I will be happy to send it over to you. So let's start talking about why are we here today. And as you know, fix and flip projects are very lucrative. They come with their own set of complexities, but they are considered one of the riskiest real estate strategies out there. So having proper bookkeeping could potentially make or break your venture. Some of the reasons why would be the importance of tracking your expenses and profits. That is important because it will help you to stay within your budget. Usually you need to have an idea of where you're heading, what is your end goal. And by keeping track of all the expenses and records, you can stay on track. It can also prevent you from overspending and essentially keep the profits in your pocket. That is a big deal. Of course, you oftentimes have investors that are joint with you, and your responsibility to try and maximize the profits. You would ensure that every dollar that is spent is accounted for. That is what we're here for, and the service I provide to you. You don't have to worry about that. You can pass it on to someone else, and that their sole job is to track all your expenses. Some of the benefits of proper bookkeeping include just assistance with financial planning. Understanding where you were before and where you're heading will help you to know how to plan properly. In addition, we talked about cash flow forecasts, and that is a little bit different than cash flows from rentals, for example. In a rental, we care about how much money is going to be left in the bank account at the end of the month. But in a fix and flip, you want to know, are you going to have enough money left over with the investment you raised to actually finish the project? And if you don't have enough, what are you going to do about it? Can you start raising some extra money early on than finding yourself 4, 5, 6 months into the project and realizing that the reserve fund is pretty much depleted and you can no longer make the payments towards the private mortgage that you have, or maybe the insurance or whatever the else you have. The proper bookkeeping will also help you make informed decisions, understanding where you're sitting at and how is it that you're going to address any issues that are coming up. Like Wayne said earlier, we want to be the CEO of your business. You want to focus on the big ticket items. You want to focus your energy on problems and resolving them. You don't want to slow down your bandwidth and basically look like this guy here, buried in paperwork. That is not what a successful entrepreneur does. They're usually the CEO of their business and they're the dreamers and they're the ones out there chasing the next big deal. In addition, proper bookkeeping helps you with tax compliance, handling all of the various considerations that you need to have about staying on top of your tax matters. There's no question that having bookkeeping done early will simplify your tax filing and will also reduce the risk of any type of audits. It is not unheard of for me to see two partners file completely different statements with the CRA. And when one partner files one set of statements and the other one a non-matching one, that is a big red flag. How is it possible that the same project had different end numbers? That should not ever be the case and needs to be investigated. So we can usually help you to just prepare a single statement so that way you can use that as your baseline and move forward. We will ensure that all your transactions are documented properly. Sometimes there are situations where a partner needs to add some extra money into the reserve fund, or perhaps you're out and about and you really need to pick up something from Home Depot, but you don't have the debit card or whatever system you have set up with your partner that has the reserve money, and you end up spending your own money for the project. That needs to be properly tracked so you can be reimbursed and you will not be out of pocket for those expenses. Common pitfalls would include budget overruns. That is a very, very common one. And it creates a financial mismanagement. A little bit of what Wayne described earlier, when you have a lot of projects going on, they all kind of mesh together and becomes a little mess. You want to stay away from that because when things start crossing lines, then it becomes very difficult to untangle how the money moved around. You want to keep very clear systems of how you're using every single account, every single credit card, and where those receipts are going and how are they being tracked. The big one that Wayne also talked about was your missed tax deductions. And tax deductions are huge. You obviously want to write off every single thing that you have spent money on. And if you lose one receipt and you forget to track it or to log it, to add it to the spreadsheet that you have been using, then what ends up happening is you're leaving money on the table. And with the personal flips, or those that you own in your personal name, your tax rate, particularly if you're successful with your business, would be really close to 50%. So for a $500 receipt, you're looking at about $250 that you're leaving on the table. And that is the hard-earned money that you worked for and you're giving it to the government when you didn't have to. And lastly, when you have disorganized bookkeeping, it would potentially be very difficult for you to get financing for your future projects. If you come with a history of 5, 6, or 7 projects that you've done, and you showcase the type of reporting that we will provide for you to your lenders, I think they would feel very confident and they would know that this is a business. This is not an amateur trying to make something. This is an actual business. They have experience and they have figured out a way to stay on the positive side. We also have another very big lie, and that is keeping the tax man away. If you go on Google and you type in how the Canada Revenue Agency addresses non-compliance in the real estate sector, one of the first links you're going to see is going to be a link directly to the government's website that sort of looks like this. And in the beginning of the page, they talk about 10 areas of non-compliance that they are focused on. That is directly from their website. As you can see, the second item is property flipping. property flipping is a big ticket item for them. They really are targeting flippers and certainly high risk area. You will see here we have an article just from this year, March 27th, where the author is talking about how CRA is calling it an audit blitz, and they have conducted over 60,000 audits on flips, essentially. So from those, that has resulted into $2 billion in taxes and penalties that they have assessed. I know, very lucrative, but a very risky area. Here's another one. This is just from last month, June 6th. You would think, oh, my flip was like 10 years ago or 5 years ago. It's probably not a risky thing anymore. I shouldn't really be worried about it. Unfortunately not. As you can see here, the CRA has actually gone 8 years back and is auditing a taxpayer on their property flip. So if you don't have your records organized today, what is going to happen 5 years from now, 6 years from now, 7 years from now, 8 years? That is a lot of time. You will probably not have the records to substantiate your claims, and very likely they will just be denied. As a result, you will be assessed taxes on something that you actually had originally some type of records, but now they have disappeared. As you know, in 2023, the government changed some rules about property flips. And essentially what they said is, if you purchased the property and you sold it less than 12 months later, we automatically consider that to be a flip. And what that means is all the profits become business income, not capital gains. A lot of people thought they could get away and say, oh, this was a long-term investment. I want to only pay 50% on the capital gains. But unfortunately, they changed that. It was a bit of a gray area, but they clarified it. They made it very crystal clear, and they're only giving us this handful of exemptions right here. And as you can see, these are very specific exemptions, like becoming insolvent or bankrupt, or the death of the taxpayer, or potentially having to move involuntarily for work-related reasons. So you don't have very many choices. You're pretty much stuck with calling it a flip as long as it's less than 12 months. So definitely you need to be mindful of this. Of course, if there's an exemption, absolutely go for it. But in majority of situations, that would not be the case. Here I have a little table that goes over the combined audit assessments from 2015 until now. And that is directly from the website that I spoke about earlier. It comes from CRA themselves. You can see that the highest number is in 2019-2020 at $527 million in audit assessments. And the numbers after that dwindle down a little bit. In my personal opinion, that is just a matter of time. Probably things from 2022, 2023, they're still being audited. And if you look at this table in 5 or 6 years' time, it is very likely that it will just be increasing exponentially. It's not going to be going down. And they also have a secondary table that shows you the combined penalties that they have charged. And if we were to use the 2020 numbers, we're looking at about 15%. So whatever is it that you're going to be assessed on, they're going to tag on an extra 15%, plus they're going to charge you interest, and the interest is compounding daily. So every day that goes by, they will charge you interest on the interest. And if they decide to do a review or an audit on something you did 5 years ago, guess what? They will be charging you interest for the entire 5 years' time that you kind of omitted something. So, big nightmare. Stay away from it. Try to stay on the good side of the government. Try to have all your records very well organized. If you can digitize everything, so that way there is no chance or opportunity to lose it, it is highly recommended, and we're going to show you some of the solutions we offer for that. So as we are moving on, I'm going to speak about a couple of case studies. I will touch on them quite fast, just so that we have enough time towards the end. But the first example that I have is about being the CEO of your business. And this was a project By the way, I have modified the number so it doesn't really match to any of the clients, but this is a real life case study. The property was purchased for about $200,000. The renovation was set to $50,000, and they had a completion timeline of 6 months. From the onset, the project was a nightmare. Luckily, I knew that person, so we were talking about it regularly as they were going along and trying to deal with everything. There was unforeseen structural repairs. There was labor costs that were quite a bit more than originally expected, and delays. Of course, this was affected by pandemic and all the other supply chain issues that were going on at the time. So that kind of affected their cash flows. Of course, they were not like thinking, oh, I need to have like bookkeeping in place. But I helped them to kind of get their things organized and calm them down. I was essentially an advisor to deal with the situation and come up with the best outcome possible. In the end, the renovation was completed by only $5,000 more. So the budget was not that big of a difference. The time was quite a bit extra than they originally planned, but they profited $65,000. So that was really, really positive. What we learned from this was the importance of being able to offload, being able to take care of the business and the issues as they come along. I'm not there to be the advisor. You could have other advisors, but I could do something for you administratively that somebody else would like. So I can do it for you so you can focus on the other problems. So that means you can deal with the delayed windows. You can deal with showing it up in person. And whenever you have receipts here and there, we will give you a solution how to not lose those. My second example is a bit different. This was a property that was purchased for $150,000, and the budget was set for $40,000. In the end, the renovation went to 55 grand, so they were 15,000 over budget. After the property was sold, it was 5,000 loss. 5,000 loss, not wonderful, but not horrible. At least we were able to help the client recover some of that money. So the way that this joint venture had worked was there were two partners. Both of them were 50-50 in it. One of them was in the 30% tax bracket. So when we were able to claim the $2,500 loss on their tax return, they recovered $750. The second client was in the 42% tax bracket. So after we claimed the loss on their return, they recovered $1,050. So between the two, almost 2 grand was recovered. So that means 2 out of 5K. That significantly reduces your losses. It allows you to understand, yes, I made a mistake, but it's not the end of the world. Like with 3,000 loss, I can move on and I can take the risk on the next project. And I know what to do. So that way it doesn't happen again. I know how to move forward. So tracking your losses just as important as tracking your profits. And here's the other thing, when there's a lot of losses, particularly many years in a row, that is a bit of a red flag. I wouldn't say red, I would say a yellow flag. It is something that you want to pay attention to. Do you have all the records to substantiate your losses? Because those losses result in money being paid from the government to you. It would be something they will keep an eye on. If they're having to pay you money, they will be like, why do we need to keep paying the money? How are they running a business that is always losing? And sometimes it is what it is. The interest rates went up. Something unexpected happened in the property. There's no expectation that your every single project needs to be profitable. But when it is not, do we have all the paperwork to substantiate it? So that is something very, very important. But when we do have the paperwork, then you can absolutely claim everything and get money back. So let's talk a little bit about what Finngo can offer you. So with our solution, very similar to our rental solution, it's going to be just drop all of your files in a single spot. We will have two options for you. It can either be a file share or our portal, where you can upload all the documents just as you come across them. We take care of the rest. You don't have to do a thing. We will organize everything by property. If you have multiple We will prepare all of the reports, profit and loss reports, so that way you can share them with any additional tax preparers, with your joint venture partners, or even just for yourself, so you can keep track of how things are going. Tax filing would not require any additional information from you. So when tax time comes, all you have to do is pull up the report from your flip and tag it along with all the other documents like the T4s and T5s and everything else you have. So our solution is full service. It just gives you everything that you need, so that way you can move forward. You would not need to do any bookkeeping, any reconciliations, any of that. So that would all be taken care of by our team. In terms of reporting, this is a kind of brief example of some of the available reportings out there. Obviously, we can break things down by property. We can have them separated between different partners. We have all kinds of ways that we can do that. We're going to track the sales proceeds of the flip that you have, as well as the adjusted cost base. An adjusted cost base would include all the items that you would normally find on the lower documents when you purchase the property, because usually you buy it for a certain dollar amount, like 150,000, but there is some legal fees, there is adjustments on interest, there's all kinds of things that go on those reports. So we will extract all the information and include it in your bookkeeping. We can provide you with ongoing reports if you think that that is necessary for you. But the most important one that I think everybody would benefit from is the partner closeout report. The closeout report would basically kind of draw a final line and say, that's it. Like, there's nothing else to go into our bookkeeping, and it's going to outline every single thing that went into that project. And if you think that is necessary for you, we could also provide you with ratio and analysis reports. And those would be just something extra that you could be using to perhaps compare it to other projects that you have or other investments that you're considering, because maybe outside of flips, you maybe want to do rentals, or you want to do like investments into private lending. When you compare the interest and like your return on investment and all those other types of things, that will be part of the analysis that we can do. I will quickly go over the plans that we plan to offer. We would basically break them down into essentials, full, and premium, and that is so that everybody can find where they fit. I know that one service doesn't fit for all, and in the event that what we're presenting today doesn't fit your business model, we would happily find something more customized for you. But essentially, with all three plans, we will include the consultation, the setup of the process of the project, figuring out what is it that you're doing and how it's going to be. With our essential plan, you would get your reporting at the end of the project. So we're going to gather all information. We're going to go work throughout of it, but we will give you just one final report at the tail end. With our full plan, we will give you quarterly reporting. And in the 6-month project, which is kind of like an average time frame, I would say, you would get two, one midway through your project and one in the end. And then with the premium plan, then you could get monthly reporting. So that would be for some bigger, larger scale flippers out there that want to be doing this on a regular basis. Obviously, all three plans would include income and expense tracking, transaction categorizations, taking care of posting all of your receipts, reconciling your bank accounts. We will also give you education and some tools and some platforms out there that can help you to keep things separate, because what is a big nightmare is when somebody comes to me and they have everything blended into their personal account. There's money coming in from their salaries, there's money coming in from flips, there's money coming in from rentals, and then it just becomes a big nightmare. There are a lot of tools out there that helps us separate everything so things can stay clean and organized, and we can use those to generate statements, reconcile everything, and make sure nothing ever gets missed, because that is the purpose of reconciliation, to make sure that everything that's gone through has actually been reported and accounted for. We now have a client portal that is new. It has, we joined about a month ago, maybe 6 weeks. And every one of our clients is loving it. Even some clients said that they would like to copy it for their own business. With our client portal, we will set up automated reminders. We're going to have a section where you can upload things. We will have all of your documents stored there. So anytime you want, you can just open it and see all of your documents posted there. So whenever you need a report, you could just log in and grab it. This portal will actually be the same one across all the entities that we have. So if you're with us and you have a corporation, or if we're doing your personal tax return, or if we're doing your flips, when you enter, you will have a list of what is it that you're looking for. You want to see your personal tax return, you click personal, and it's going to take you right there. So this one is a really cool feature that I've actually loved a lot lately. And then, of course, everything is going to be compliant. We're going to make sure that everything is reporting how it's supposed to be. We're not going to be double recorded revenue. So that is when there's contributions to your account. There's a lot of misconceptions about who's putting money in. Does it need to be in revenue? Do we need to take it out later on? So all that will be taken care of. If you go with the full plan, we will also include the vendor management. So that means keeping track of all the different suppliers you have. It can be subcontractors, it can be like bigger companies that you purchase materials from. So that way you could get supplier reports. I think supplier reports are very important, and particularly for costing and for later on when you're starting to do new projects, so you can compare, or you can at least estimate what is it that you would want in the future to your next project to cost. So if you have a budget of 50,000, what can you afford with that? With the full and premium plan, we will also include your own QuickBooks file. With Essentials, we will not. We are trying to keep the cost of minimal. We will use our in-house QuickBooks subscriptions, but for full and premium, you'll have your own, so you can log in anytime. You can see that everything that is going on with your file. We will also include Dex receipts. Dex is an amazing platform, and it's what is going to save you from the paperwork nightmare. With Dex, you have an app on your phone, and whenever you're out and about and you have a receipt that you come across, you literally snap a picture and then you throw it out. You don't need it anymore. Once it's been digitized, it will literally be stored forever. We will have access to that account, and as receipts are coming in, we will be categorizing them in the particular project that they need to go. If there is a question that comes up, we will type it into the chat section, and your phone is going to ping, and you're going to see a picture of the receipt, and you're also going to see our question. So you can answer on the spot, so we can very fast and very efficiently put things in the right spot. You're not going to get huge ass lists where it's an Excel and it just has like the description of, you know, two line items like email transfer, and then try and figure out what that is for. So we will actually use Dex for that. Dex also has a very unique feature that I love. It gives you a email address that is unique to you, and we can create unlimited ones. If you have suppliers or contractors or anyone else in your business, you could give them access to your Dex so they can be out there and putting receipts. So you don't have to go and take them from your plumber or from your GC or whatever. You can actually get them to upload it on the spot. We would know who did it. We will have an audit log. We can always review things as time goes along. And Dex also has the ability to connect to some suppliers. I'm still experimenting with that. Canada is a newer market for them, but eventually I would like them to be able to connect to Upcore and connect to various platforms like Home Depot accounts that you have. So that way it just draws the information out of there automatically. We don't even need to go and take pictures of the paper receipts. And lastly, with your unique email address, you could just receive an invoice by email and forward it to Dex, and then you know that it's been filed. You can archive that email and it's out of your inbox. So those two things are super, super valuable. Using them with pretty much every single one of our corporations that we take care of. So that would be something that we want to offer as well for those who are getting started with their flips and want to be ahead of the game, essentially, and they want to grow and graduate into like a bigger business and potentially incorporate at some point. With Premium and Full, we'll give you unlimited support, so we can answer questions anytime. We can pull up documents. We can try and find things that you're needing for the next project that you're working on, or whatever the case may be. We will also help you with tracking accounts payable and accounts receivable. Accounts receivable in flips, not as much, but accounts payable is a big one. We have some really cool tools where you could be paying your suppliers by direct deposit. We could be taking care of setting everything up and just letting you be the authorizer. So you just click approve and then everything is paid when the time comes. So you don't have to stress about when is the next deadline of paying my bill. And then, of course, we will include the project profitability analysis. So that will be with the ratios. And it's something that I call a post-mortem. So you finish the project and then let's analyze it in very deep details so we understand where we're at. If you go with premium, we'll do the cash flow management for you. We will make sure that you're not going to run out. And if you are, we will tell you well in advance. So that way you can raise money. Those are the situations where the projects go the wrong way, and then you start overspending, or there are delays, and then you will end up in a spot where there's not going to be enough money to cover the costs in the end while you're holding the property until it actually sells. We'll give you some additional in-depth financial reporting just because we will have access to QuickBooks and other tools. We can actually hook it up to external platforms that can provide us a more in-depth analytical report. We will sit down with you and personalize a financial strategy. And then we will also create some exclusive tools. I'm working on some unique spreadsheets that you could use for presentations. I'm thinking of creating an ebook as well, just to kind of help with what are the misconceptions around flips. So just some extra things. And while we're doing your monthly reporting, we'll do a very quick health checkup as well. Like, how are things going? Like, is there something that needs to be done? And lastly, if you are with us for about 6 months or so, like a single project, we'll give you an hour's time of just like a review. Sit down with me, let's discuss it, let's figure out where can we take this in the future. Is it time for you to incorporate or do something else? And then if you are doing 2 or 3 projects and perhaps it's more of a year type of thing, we'll do that for 2 hours just because you'll need that extra time. Now, some notes, these plans were created around the idea of your flips being not incorporated. If they are, we have other solutions very similar to this, but just they're through the corporation. It does include a balance sheet. It does include a little more depth into like actually recording things and reporting them and creating notice to reader financial statements and things like that. We're basing it on 30 transactions a month, average life of your project. And to figure out the life of the project, we're going to use the start date when you purchased it, and end date being your unconditional contract being signed. So that just helps spread out the transactions. I understand that usually they're all heavily loaded in the beginning. So we are not going to charge you at the beginning. We will just spread it out. Same thing with our pricing, rather than charging you up front, we will do it in installments. So that way, as the project moves along, we can keep track of everything. You can see the value, we can provide you the value, and you can be paying as time goes by. In the essential plans, it's going to be $69 a month. With full, we're going to do, or $69 bi-weekly, sorry. The full will be $89 and premium $99. But the big thing about these numbers is that all of them are tax deductible. So that means that if you are using our services, you could potentially be getting up to 50% in savings for all this. So that means using the government's money to pay someone that is a professional to reduce the amount of taxes you have to pay. So I think that is a huge win. Of course, no contracts, no time commitment. Just this is project-based. It starts with your project and it ends when the project is completed. We don't expect that you will continue paying us after that or before that. It's a very beginning and end type of thing. And we love our bookkeeping. So as a result, if you are going to use our own bookkeeping, we will give you 15% off if you use the essentials when tax time comes and you get to file your tax return, or 25 if you go with a full premium plan. And lastly, we want your referrals. So our goal is to make sure that anything we do, you're fully satisfied. We will try and find something that fits your needs. So this is kind of like an assumption and kind of a starting point, but I understand some people might want to do 5 or 6 flips in the summertime and then do nothing the rest of the time. Well, if you're a heavy volume like that, we might need to create something a little more customized to you. And if that is the case, I would highly, highly encourage you, take a screenshot of my QR code, book an appointment with me, and let's discuss what is it that you actually need. Because I understand that there's people who have corporations or they're thinking about it, and we can go through all the benefits and figure out, is this something that is better suited for you?
Awesome.
Wait, thank you. Okay, I powered through that. There was a lot of information in a short period of time.
When you're good, buddy. When you're good, you're good. You clearly know what you're talking about here, and it was a lot of information, but very incredibly valuable. And also, the service obviously that you're offering is incredibly valuable as well. As I mentioned earlier, I'm very passionate about making this an industry standard, a norm, that people should have this included. You should be analyzing and your deals and doing a cash flow analysis based off of, that's right, not a cash flow analysis, but a deal analysis on your fix and flips based off of including this into it, just like you would paying insurance or you'd pay property taxes. It's just, it's too good not to, you know what I mean? Now we do have some great questions here that have come in, and we'll take a few of these, and then if you have any other questions afterwards, obviously, like you said, take a scan of that picture. You're pointing the opposite way I'm doing.
Oh, I'm going to try and post it in the chat as well. Just in
Yes. Yeah. Reach out to Steve. Just have a consultation and have a conversation about it to make sure that's all good for you. The first question that came through was there was some when you were talking about the made a note. When you were talking about the closeout, the joint venture closeout statement, someone was a little confused about what exactly that was. And my assumption is maybe they just didn't quite understand what a joint venture is. So maybe just explaining, because a lot of people, they think about, okay, I'm going to get private money for this deal. When you have a joint venture partner and there's a partnership, a share of the equity, it's a little bit different, right?
It is, and because you have third parties, you're usually using somebody else's money in that point. Sometimes it's one person, and sometimes can be two or three. So the partnership can be anywhere from 1 to 5 people, I would say. And with our closeout report, we're essentially dividing all the information of how it's supposed to be based on the equity that the partners have agreed on. So that way there's no questions, and it is very clear what each one of them should be reporting on their own statements.
Okay.
The reason is that everybody needs to report their own information on the tax return, on their own tax returns. In a personal flip, you essentially are taking a single project and trying to split it out between different partners. It does go onto the statement of business activities because it is considered business income. It does not go on rentals. It does not go in its own separate tax filing. It goes as part of the tax return, and it's a schedule that gets attached. And in that schedule, we want to make sure that we fill out the right information. So with our project closeout report, it helps all the partners figure out what is it that they need to report on their tax returns.
There was another question about that statement around that same time, and they asked, does it include like the return on investment as well? Like, is it something that would include something like that? They can let their
We don't include the ratios or analysis on it. That is a separate type of report. That is the analytical reports we talked about earlier. But the closeout report is just the numbers, like what is it, what line number things should be going on, profit, and how that profit gets divided between partners.
Okay.
So it's essentially income, and then all the expenses broken down, final bottom line, and then the division between partnerships.
And there was also a question. Okay. There was also a question about this is for fix and flips, but do you have services for buy and holds, rental properties?
Yes, absolutely. The buy and holds, that was last week's webinar. They are quite a bit different. It's a much more scaled down approach and a lot less expensive than the flips. The flips are more expensive because they're so active and so fluid. We need to be available all the time. Therefore, we need to charge you a little bit more money. But with the rentals, it is pretty much takes a year. You only need to report it once a year on your tax return, regardless if you have partners or not. You just need to do it once a year. So we have way more time. We can squeeze it in our off time. So it's pretty much $35 a property. It's very flat.
Awesome. And there was an additional question about, can you guys advise on long-term planning as well? Say multifamily project, 5 to 7 years in regards to taxes and things to watch out for.
Potentially, yes. I mean, advisory services, essentially what the premium plan was about. As you notice, all the line items were mostly about advisory and figuring how can you scale up that business? How can you take this to the next level? And potentially incorporating, setting up holding structures, that kind of thing. And absolutely something that we can offer.
And this is why I think it's just so incredibly valuable to not just singularly using Finngo for bookkeeping, but also for taxes as well, and having it all on hand Everything's all in the system, and it's very easy for you to book a call with Steve to have discussions about your property or portfolio or your plans long term. And he has everything, or the team, whoever you're working with, has everything on hand, and they can have that discussion. Whereas if you're just doing it for booking, it's a little bit difficult. So, but you know, having all of your financial accounting services all in with Finngo is incredibly valuable.
Yeah, so just to make it clear for everyone, we can provide all the services up to compilation engagements for corporations. So that means just notice to reader. That's the most common type out there. When it goes into assurance or providing an opinion on your financial statements, so that is a review or an audit engagement that requires a different type of license. But we have connections and we can definitely get that done as well if your file needs it. But if not, we like to keep your costs down, keep everything in-house when we can.
Are the monthly charges per flip? What if you have multiple flips going on at the same time?
Yes, that's a great question. So it's kind of designed on one at a time, but sometimes there is a bit of an overlap. So we would probably work with you on that. If you're doing 4 or 5, like if you're doing a lot in the no, I guess spring to summer market because you want to list it before winter hits, we might need something a little more customized. We will look at your volume and we will try to determine what is it that would be good for you. What we presented here is for those who are kind of getting started and they're doing them one at a time, maybe a little bit of an overlap towards the end for the next one.
Okay, last question. It's actually a question from me because I think it would be valuable. And my question is, when is a good time for someone to reach out to you? Fix and flips are a little bit different than rental properties. Obviously, rental properties, you can do it kind of at any time. Fix and flips, is there a specific time that someone should reach out to you once they've got it?
Yeah, we want to get on it sooner than later. Our onboarding takes a little bit of time as well, so we want to make sure we have all the tools and everything set up and ready to go for you. So I would say the moment that you have an unconditional offer on a property that you plan to flip, it's the time that you should be calling us, because pretty much right away, the moment you remove conditions, we can start setting you up because it looks like you will actually be moving forward with that project.
Okay, so you almost added as almost part of your your checklist when you're doing a fix and flip. Normally, you're thinking about gotta get the contractor in there, get the quotes, get all the windows ordered, get the insurance, get the utility set up, call Steve from Finngo. So it's all part of that checklist.
Get the accountant because we want to be on it. We want to give you the right spot so you can be uploading all the documents as they come along. And honestly, the first document is your contract. So we will start with that. So.
Awesome. Wow, Steve, this is amazing. Thank you so much for putting this on. I really enjoyed it, and I could just tell by everybody's enthusiasm in the chat as well that they're loving it as well. There was one comment that I really liked there. It was automation rules, and I know you, and I know how passionate you are about automation and learning all the new coolest gadgets and everything else. You geek out on that stuff.
Exactly. So our plans will probably change as time goes by and I find new tools and new things and better reports and all that. We will absolutely change it, but only if it benefits the client. So we will use technology whenever we can, but only to get it better and not to skip down, because we want to free more time both to the client and to ourselves as accountants, so we can give you that advisory. We can help you to create the next step so you can make your business bigger.
That's why we're doing it, right? That's why we're outsourcing, is we're buying our time, and the more time that we can buy, the more effective it could be. The more time we could be spending on the most effective things in our business, which is finding deals and finding money, right? That's what we're supposed to be doing. So anyways, thank you again, Steve, and thank you everyone else for showing up tonight. It was amazing.
Have a great evening.
Okay, have a good night, guys.